Kia ora whānau, and welcome to another episode of Get a Job and Get Healthy with Costas Enterprises. I am your ever-loving host, Alex Costas, and today I'm going to follow up on one of the things that I've seen. So I want to thank everyone for listening to me, and one of the most popular episodes I seem to have is when I talked about my sharesies. So it's going to be sort of an update on investing for dummies, where I'm at, how much I've got invested, what I've done, and just a couple of surprising things that I've found as well. So, first and foremost, I've been doing sharesies now probably about a year and a half, 2 years, at least. And in that time, I have, invested a total of, maybe close to 3,000, but I have taken a lot of money out as well. So I took, maybe 700 out, in total, which I know I shouldn't do, but yeah, I thought we'd sort of get into that. Before I go into the more details at the moment, what I thought I would do is we'll tell you about all of our fun things that are going on. First and foremost, you can find out more about me by going to my website, www.costasenterprises.business.blog. You can also find out You can also hit me up on my email, doncostas@gmail.com. That's DONCOSTAS@gmail.com. MetaMasks, we do have MetaMasks still going. I am still working with MetaMask. In fact, I am now one of two people that has actually taken over the MetaMasks. I'll talk about that another time when we start pushing that a bit more, because we're still working on things at the moment. And you can get that through the Discord that's in my link. You can go to my Candle website, which is with my partner, www.onyengarden.com. Go to our Instagram as well and see all the things that we are creating. We have created this thing, and we also, the website is run through Shopify. So that's another thing that we will be talking about probably in the future. A little bit more about Shopify, Printify, all those sorts of things. You can find me on Instagram and on Twitter at @thekiwidon, and please feel free to do so. As I said, anytime you want to, you can ask me questions through doncostas@gmail.com. Just put the mention that you are actually calling on behalf of my podcast. Just put podcast and then do it that way. So, let's get into the nitty-gritty stuff, shall we? Sharesies. How much have I put in? What am I currently earning? What have I got invested? What's surprised me? All those sorts of things. So I still maintain that people should be investing first and foremost in an index fund, then managed funds or an ETF, electronically traded fund. And very soon I'm going to be trying something that I've read about, but we don't really have them here in New Zealand. So I'll be investing in an American one, which is a REIT fund, which is the Real Estate Investment Trust. And you can actually buy shares in the REIT Trust through the Sharesies thing. One thing I will do in this episode as well is I will share my Sharesies link. If you use this Sharesies link and you are a New Zealand citizen or resident, and you've got things like your PayPal and all that sort of things, and you've got everything all sorted. You are a tax resident in New Zealand. You can actually use this and get $5 to invest in whatever you want to, which, might not sound like a lot, but still there are always things there that is there that you can potentially look at. So we are all about the passive income here, and hey, shares, investments is probably one of the best things that you can do apart from retail property. Rental properties at this stage to make actual passive income, because that's what this is all about. So, how much have I put in? I've currently put in $2,091.36. At the moment, and this is the first time in a while, I've actually been in the positive, and currently, as of today, as of right now, I am 12.77%. So that's 12.77% as my return. That means I'm in the positive. Now that, based on the $2,000 that I've put in, that gives me my return at $266.99. So that is $266.99 is pure profit based on what I've got. So if I was to sell everything today, I would be up $260, basically. So what have I invested in? Okay, well, not much has changed since I first told you guys. I am all about investing in the same things and then, keeping those as a positive. Now, I'm going to go through from the negatives to the positives first, okay? So, first and foremost, I had the opportunity to put in for to put $5 in, was what I put in, towards what we call it is a share, and it's the True Screen Group Limited. Now, these guys were doing an offering, and sometimes Sharesies will send you an email going, hey, these guys are doing an offering. You can get in now, and then, they'll tell you how much the share that they're wanting to sell for and all that sort of thing is. And so that's what I really did, is I put $5 in. Now, I'm currently down by about 13%. So I'm sitting at $4.33 for the share that I got. Now, with the True Screen Group Limited, I currently have 166 shares. So this is the kind of investment where I might hold it for a while, maybe a year, see where we sort of come from. But at the moment, they are currently trading at 26 cents a share. Sorry, 0.26 cents per share. So not even 26 cents. They are down, of course. They originally were at 74 cents. So if I sort of double my money, I will sell my investment. That's 166 shares that goes up. I'll read you. So one thing that you can do with Sharesies, which is really cool, is you can learn more about the actual product and the shares that you're actually wanting. So in this instance, I'll read you what it is and what you see and that sort of stuff. So at the moment, it goes, True Screen Limited is a New Zealand-based company which is engaged in the business of the development, manufacture, scale of cancer detection devices and systems. The company owns the rights to the True Screen cervical cancer screening system, which comprises a medical device and process designed to detect the presence in real time of precancerous and cancerous tissue on the cervix. The company's product, TrueScreen, is used to detect precancerous change or cervical, intrapelvial neoplasia, CIN, by optical and electrical measures of the cervical tissue. The product offers an approach to cervical training, resolving ongoing issues with pap smear tests, including failed samples and other patient follow-up. It also provides TrueScreen Ultra, which is a cervical cancer screening device. The company has operations through New Zealand, China, Uzbekistan, Austria, Mexico, Russia, and others. TrueScreen Pty Limited is the company's subsidiary. So that's just the main overview. Now you won't get as detailed with every single share that you invest in. This is, in this case, a share. This is not a fund. This is not an ETF. This is a share. And that's why it is going to fluctuate a lot more. And, we can see things like the 5-year low, the 1-year low. So the highest it's been has been about 74 cents, okay? So it hasn't been very, very high. And that's okay. I'm fine with that, basically. This was a risk one, and I'm okay if I lose $5. Let's put it that way. So when you go into Sharesies, you've got the option of the overview, and then if you have invested, you've also got your investment. So in this case, my investment tells me how much I put in, which at the moment I've got $4.33 is my current investment. I put in $5, which is the amount that I put in, and that gave me shares of 166.66666665. Okay, so at the moment I'm minus 67 cents. So, I'm not expecting much. And that was back on the 22nd of March. So I've had it for just under a month. And the closest it's gone up is plus 6%. Minus 6%. And now it's minus 13%. It was minus 16. So you got to remember, because it is shares, it does go up and down. The next one I got is the Smart Shares Australian Property. Now, I got this because originally this is what my mother said we should possibly look at investing in, and she had a reasonably good return when she had it. With this particular one, I'm not going to read their overview, but I will tell you it is a fund. So it's one of those ones where it covers sort of more than one share. So that's the difference between a fund, a mutual fund, and an index fund. An index fund will cover the entire index of that particular thing. So if I wanted like a technology index fund, that would cover all technology. So it would cover your Tesla, your Amazons, it would cover your IBMs, but it would also cover things like the cancer ones. It would cover all that. So it covers every single shares. There's a portion of that. So if entirety everything goes down, then you're kind of up a creek. If not, then you might get a return. I've put in, $5. It's currently down to $4.20. So I'm minus 56 cents on this. Again, I am going from the negatives to the positives. At the moment, it is minus 11%. If we go to the 5-year, it was, the highest it's been is about, if we go to overview, the highest it's been is $1.75, okay? And I bought it at about the same. So I bought it at its highest, which is not the best. You don't want to buy it there. And I've got about 3 shares in that. So at the moment, being the fact that this is the New Zealand Smart Shares Australian Property Fund, which means that it's not on the Australian index, it's on the New Zealand index at $1.30, $1.337, so $1.33 New Zealand a share, means that, for $10 you can get just under 9 shares, basically. Maybe a little bit more. 9 point something. That is good at the moment because it is quite low. And they do pay dividends. So what I do try to do is I do try to buy funds or investments or things that do pay me a dividend so that I end up getting something back. It may not be a lot, but it may be something. So for example, the last 3 dividends I got from this particular share that I bought in August 2021. I haven't put any more. It's just been in $5 and it's been down the whole time. But I've had 8 cents, 7 cents, 8 cents. Okay, so that is every 6 months. So I'm getting a 16-cent increase based on it. So we're not talking a lot of money. Okay, so that's the next one, and then let's go to Fisher and Paykel. Fisher and Paykel Healthcare. I have exactly 1 share, which I have at the time I put in, it was $31.16. Okay, currently it's down to $26.76. So as you can see, it's also had a decrease of about 10.74%. Okay, so again, it's not working too well, but it does pay dividends. So the dividends do change based on what it is, and you get paid again 6 monthly. The first dividend, I bought this, I bought this on, when did I buy this? I bought this on the 26th of May, 2020, and I put $50 in, and then I took some money out and all that sort of stuff. But based on the money that I had, I got $24, and then I sold $21 worth of it, and then I got 15 cents, 21 cents, 16 cents, 22 cents, 17 cents, all on my dividends. So as you can imagine, it does change quite a bit. I do apologize for speaking very fast in this instance, because we've got a few shares that we've got to get through. So there's going to be quite a few talking, and I want to get into a bit more detail with them as well. The next one I've got is currently up 0.15%, which means it's less than 1%, well less than 1%. And this is the Vanguard S&P 500 ETF. Now, I do strongly suggest that people do actually look at this. Okay, this is a fund, and it is of the top 500 companies. Usually, this has about an 8% return every year, 7 to 8% return since 2008, when they had the great global crisis. Now, I am investing. This is the US version. I do also have the New Zealand version, which is trading at a lot less. So the difference between this is, with Sharesies, you can actually invest in New Zealand shares, Australian shares, and US shares. And the US shares, you do pay US dollars. So my money I put over like 100 every fortnight, for example. If I decide to buy one of these US shares, Sharesies will automatically convert that money to US dollars for me. When I transfer it back, I will have to pay the conversion rate, of course. But then it will buy the US share for me. So at the moment, the Vanguard S&P 500 is currently trading at $378.97 US dollars per share. So I currently have, I've got $439.30 US in there. So I've got 1.15 shares. I've put in 445 $0.82, which gives me 1.15918,497 shares. So basically one and a little bit of shares. Now, I did have more money in this. I took the money out because I needed money for this, but I will be reinvesting into this particular share myself. So at the moment, that means that I have a current return of 65 cents US. Now, again, you do get paid dividends for this as well. So, for example, since I put this in, now when I originally put this in, I bought it on, let's have a look. I bought this on the 1st of September 2020. So this was the very first time I actually bought a share that was for $100 US, and I paid $101 US for it. That's how much I put in. Then on the 7th of October, I got 28 cents US dividends. So you do get paid your dividends in US dollars, okay? And then I put in more, and I got 56 cents, 94 cents, $1.26. So the most I've ever had come back as a dividend. And you get paid with the dividends, you get paid 4 times a year, okay? So you will get 4, so for example, if you put in, you get paid in October, December, April, and I believe, three times a year, or August, yeah. So you get paid about 4 times a year. It's not going to be a lot, okay, unless you put a lot more money into this. The dividend rate is not, it's not fantastic, but the fact is that this is a actual, so the gross dividend yield is about 1.59% of what you put in. Okay, which is why you're looking at $1, $2, based on each share that you've got. That being said, the more money you've got in, the more money you make work for you, basically. So that's how that works. So as I said, that is one that I will keep investing in, Vanguard S&P 500. Then I've got a New Zealand fund, which is the US Large Growth Fund. Now, what this is this is investing in 250 large corporations over US. Again, it is a fund, but this time it's a New Zealand fund based on the US stocks. So it's $7.63 per share, okay? And for that, I currently have, let's have a look. I've originally put in $713.35 shares. I have exactly 100 shares based on that. And I currently am up $48.36, and that is a return of 6%. Okay, so taking my total to $761.20. So being up almost $50 from a $7 share is not bad. And again, you get paid dividends on this. I've only been paid one dividend so far, which is of 59 cents on the 21st of December. Sometimes you will get dividends, sometimes you won't. This is more one of those ones where, you get paid 0.11% of the dividend. But the fact that it increases and that the price change has starting to increase, and it did go down low. It went has been down to $3, but now it's sitting at about $7. It's not a bad investment, okay? And you may not get significant dividends yet, but it all depends on when it is actually going through, okay? All right, the next one we're going to go for is the Smart Shares US 500 Fund. Now, this is similar to what I talked about before. This is the S&P 500, but this is the New Zealand version of that with investing in the exact same one. The difference between this fund and the other fund is with the Smart Shares Fund, you're paying in New Zealand dollars, but you're not paying $384 US per share. You're only paying $12.31 per share, which I can tell you when I bought this at $8.30 a share, and it's currently $12. That means that I am doing quite well on this one. So for this one, I've put in $331.88. That has given me 29 shares, and the current return is 7.65%, meaning that I have a current increase of price of $25.37. So this is something that I will keep looking at, and with this one, I do get dividends as well. The dividends are paid 2 times a year, so 6 monthly. First dividend was, if we go for the last year, from the 20th of June, it was $1.23. For the 21st of December, it was $1.55. Okay? When I originally bought in it, I had 11 cents. So the dividends aren't fantastic. The dividends is only 1.04%, which is not too bad. It's 1% of your total shares that you've got. Can't really go wrong with that, really. Moving on, we've got the Coca-Cola. So I am a big fan of Coca-Cola. I grew up collecting Coca-Cola and all that sort of stuff. And so one of my big goals growing up was to buy a Coke share. And at the time when I was growing up, they were trading at around $300, per share US. Now they're trading at about $63.05. This is one of my best producing shares. And it's actually not a bad dividend as well. Now, in the last 5 years, it has changed. The highest it's been was sort of 66, which was on April last year. And it's sitting at about 62. So it did go down, but it's gone back up again. So this is, again, a US share. They are currently $63.05 per share. I originally put in $51.36 to buy one share. And my return is currently $14.61 off one share. And that's a return of 28.46%. So can't really go wrong with that. Again, this does pay dividends. And in this instance, the dividend was you get paid dividends 4 times a year, 30 cents US, 30 cents US, 30 cents US, 31 cents US. It's one of those ones where it just keeps investing. So it is quite a cool little thing to have. I will probably be putting some more money into this. The dividend yield is 2.79%. So you're getting 2% based on your dividend. So that's not bad at all. Now we come to the shocker. Okay, so the shocker, the reason I call this the shocker is I have invested in this. This is not a fund. This is an actual share. So there is major risk with this. And I will be the first to say this is major risk. The reason I purchased it is because at the time it had the highest annual dividend. And I was like, okay, what is the dividend? And it was something stupid like 300%. And I was like, I've got to put some money in. So I did. And this is called Zim Integrated Shipping Services Limited, ZIM. Their highest that they were in March last year. They were $85 a share. They're currently trading at $21.65 per share. Now, they have not been going for 5 years, so you can't look at their 5-year data. But their current gross dividend yield, wait for it, is 61.23%. So for every share you've got, you're getting a return of $61.23. Let me explain how that works. I've put in total $173. I am currently up $61.16 on this share. I only have 9.33 shares. Okay, so I don't have a lot. A simple return is 35%. That's how much my profit currently is. But my original market buy, this is how much I bought it for. I bought 7 shares for $136, okay, US. My return, which is the first return that I've had, was on April. It was literally a couple of days ago. It's the reason I'm doing this whole podcast episode. From the 6 shares, my return was $32.15 per USD total as a dividend. Now, they do not pay their dividend. They pay them basically, it looks like they pay them yearly. But to get $32 off a $130 advance is crazy. So they pay their dividends in August, November, April, May, March. So you get paid 4 times a year. And if I read back there, so they haven't been going very long. Now, on the 24th of August 2021, Their dividend yield was $2 US per share. On the 15th of December, their yield was $2.50 per share. On the 22nd of March, now this is the big one, $17 per share US. On the 27th of May 2020, it went back down to $2.85 per share. On the 26th of August, it was $4.75 per share. On the 28th of November, it was $2.95 per share. And the 4th of April, which is the one that we just went through, it was $6.40 per share. So you're getting $6.40 per share. Now, as you can see, the dividend yields change. It looks like from the trend that I'm seeing, it looks like, you can expect a higher yield in April or March, which is why mine was $6.40. But usually you would expect around $2 to $4 per share for the other 3 quarters. Now, I will be investing more into this share. I've got a couple that are on my watch list, which I will try them out first and then let you know. But the simple fact is, I took that $32 and I reinvested it inside the same one, which is why I'm now sitting at $173 put in. I aim to get that to at least $500. Of course, I have talked about my redundancy, which is a different thing, and that will cause, some issues for me. But it is definitely one that is worth looking at. As I said, they are still very new. They only started trading in 2021. But the fact that they're doing a 61% dividend yield is crazy. And it is one of those ones that I think I will hold on to for a while, and I will look at it, and I will go, okay, what is going on? Where are we? And all that sort of things. Yeah, I'm very, very shocked by it. Very, very shocked. So yeah, I am still sticking to trades. And what I was talking about before that I'm thinking about doing is if I go to my watch list, I've just found 3 shares. Sorry. I call them shares, they're actually funds, okay? And they are the City Office REIT, the Beta Shares Crude Oil Index Currency Hedged Fund, and finally the Ocean Pal Incorporated. The reason I've picked these shares is they are low entry, so they're, one of them is 29 cents US per share, one of them is $5.71 per Australian dollar, which would be the first time I'm buying an Australian share as an actual Australian share. And then finally, the other one is $6.90 per share.